Although there are some fundamental distinctions between investing in stocks and real estate, the success of either depends greatly on timing. Few investments would have outperformed purchasing beachfront property in California in the 1970s and selling it 20 years later. Almost no real estate transaction could have outperformed the returns you would have received if you had purchased shares of Microsoft, Apple, Walmart, or Amazon at the beginning of those companies' histories. When making investment decisions, timing is impossible to forecast, but understanding each form of investment is essential to deciding on the best course of action to help your money grow and provide financial security. Hello 101 community! Welcome back to our YouTube channel. In today's video, we will talk in detail on if you should invest in stocks or real estate. So make sure to watch the video till the end. Before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Investing in stocks. Starting with a solid foundation is the best way to build financial independence. This becomes possible by utilizing stocks to grow expanding companies. Despite the potential long-term rewards, getting started might be intimidating for many novices wishing to enter the stock market. However, you can start buying stock in only a few minutes. Even the most seasoned investors can become uneasy due to record-high inflation and stock market volatility, brought on by conflict, supply chain problems, and rising interest rates. Additionally, most investors would be wise to create a diversified portfolio of equities or stock index funds and hold onto it during good and bad economic times. However, a lot of investors prefer to have a little bit more action and trade stocks instead. To pace the market, stock trading includes continuously purchasing and selling equities. Stock traders want to profit from short-term market changes, to sell their stocks for a profit or purchase them at a bargain. Some stock traders buy and sell multiple times throughout the day, known as day trading. Bull versus bear market. A bear market is characterized by declining stock prices across several indexes above, typically by a 20% margin. Bull markets follow bear markets, and vice versa. Both frequently signify the beginning of more significant economic cycles. To put it another way, a bull market often denotes investor confidence, which denotes economic expansion. A bear market indicates that investors are pulling back, which suggests that the economy may do the same. The good news is that the average bull market lasts much longer than the average bear market, allowing you to grow your money by investing in equities over the long term. Importance of diversified portfolio. Your portfolio is better protected from inevitable market declines when it is diversified. Suppose you put all of your resources into one business. In that case, you're gambling on the success that could be abruptly ended by legal complications, ineffective management, or an E. coli outbreak. Investors diversify by combining several stock kinds, balancing the inevitable losses and removing the possibility that one company's tainted meat may devastate your entire portfolio to smooth out that company's specific risk. Drawbacks of investing in real estate. Before investing in real estate, you should be aware of a few drawbacks, some of which are severe enough to deter you. Investing in real estate is a long grind. Real estate investing typically yields profits over a long period of time, but only if you make wise purchases and put enough money into maintaining your properties. Additionally, a significant amount of effort may need to be spent managing the properties, depending on the properties purchased and the character of your renters. This can prevent you from taking any vacation for years if you intend to manage properties independently. Income from real estate can vary. There may be times when you lose money. This is particularly common when there is little down payment, leading to higher mortgage payments. Additionally, during times of weak demand, increasing the rental fee as much as you would like may be impossible, or a property may not be rented at all. This is especially true if you bought the property in a neighborhood with inherent flaws. like relying on a single local firm that later closed and laid off workers. The price of real estate transactions is high. The costs involved in buying and selling real estate can be fairly high. These expenses, which might include commissions, title insurance, loan origination fees, and various closing costs, can quickly offset an increase in a property's market value. Only by holding onto assets for a long time, allowing them to appreciate significantly, can these expenditures be compensated. The real estate agent's commission, which varies by kind of property, makes up a sizable portion of these expenses. A freestanding home commission is one of the highest fees a realtor would charge. How much should you put into the stock market before you begin investing? Many online brokers like Betterment don't impose fees on balances of $0 and don't set a minimum requirement for opening a trading account. Through these brokerages, you can begin investing with any amount. Some companies even let you buy fractional shares, so you don't have to purchase a complete share if you can't afford it. Discount brokers are a blessing for new investors with little funds, who frequently want to gain exposure to the stock market with smaller portfolios. However, a discount broker rarely offers individual advice or research. Many brokers don't have a $1,000 minimum balance requirement to open an account, but some do. But for real estate, you have to have a big sum of money that you can use to buy the property and make a profit out of it. With inflation going crazy throughout the world, real estate prices also increased, and it became more and more difficult to own a property and make a fortune out of it. If you liked the video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. Investing in real estate. Residential assets such as your home, rental properties, or flipping homes to acquire, then resell for a profit. Commercial properties, such as apartment complexes, office buildings, and strip malls, can be divided into two groups regarding traditional real estate investments. The pros of investing in real estate. Real estate investing is simple to comprehend. Despite the complexity of the home buying process, the fundamentals remain straightforward. Purchase a property, take care of maintenance and tenants if you own several properties in addition to your home, then try to sell it for more money. Additionally, purchasing fractions of ownership in businesses through shares of stock can make you feel less in control of your investment than purchasing an actual item. Real estate is a safer investment to make with debt. You can invest in a new house with a 20% down payment or less and finance the remaining cost of the property, also known as your mortgage. Margin trading, also referred to as stock investing, is a dangerous strategy only experienced investors should use. The cons. Real estate costs a lot of money and is very unstable. Real estate investing demands a sizable upfront investment, even with a cash loan. Reselling a real estate investment is much more challenging than buying and selling stocks, which can be done with just a few clicks. Real estate investment diversification is challenging. When purchasing real estate, location is important. Sales can decline in one area while values soar in another. A lot more money is needed than the ordinary investor possesses to diversify the acquisition of real estate holdings by location and type. A mix of residential and commercial, for example. Versus. Pros of investing in stocks. Stocks are highly liquid. Real estate can keep investment money locked up for years. But you can buy or sell shares of a public company the moment you decide it's time to take action. It's also simpler to understand the value of your investment at any time, unlike real estate. You can more easily diversify your stock investment. Few people have the time or resources to buy enough real estate to cover a wide enough range of regions or business sectors to diversify. With stocks, it is possible to amass a varied portfolio of businesses and sectors for a fraction of the time and expense of doing so with real estate. Cons. Compared to real estate, stock prices are significantly more volatile. Stock prices can fluctuate up and down considerably more quickly than real estate prices. Unless you buy stocks and funds for your portfolio with a long view, which means you intend to buy and hold despite volatility, that volatility can be nauseating. Taxes on capital gains may apply when stock sales are made. You may have to pay capital gains tax when you sell your stocks. However, you can be eligible for taxes at a lesser rate if you've owned the stock for longer than a year. Additionally, you might be required to pay taxes on any stock dividends distributed by your portfolio during the year. Types of investment. Well, there are many types of investment, but today I will define a few of them. Bonds. You are essentially lending money to an organization when you purchase a bond. Typically, this would be a company or a government agency. Municipal bonds are issued by local governments, whereas businesses issue corporate bonds. Investors can purchase treasury bonds, notes, and bills, all debt securities issued by the U.S. Treasury. Mutual funds. A mutual fund collects numerous investors' money, broadly invested in various businesses. Both actively and passively managed mutual funds are available. A fund manager chooses which securities to invest investor money in and runs an actively managed fund. Fund managers frequently attempt to beat the benchmark market index by selecting investments that will outperform such an index. ETF. Mutual funds and exchange-traded funds, ETFs, comprise a group of investments that follow a market index. ETF shares are bought and sold on the stock markets instead of mutual funds, which must be purchased through a fund provider. At the same time, mutual funds' value is merely the net asset value of your investments, determined after each trading session. Their price changes throughout the trading day. What is better to invest in, stocks or real estate? It would help if you weighed the following variables when deciding whether to invest in stocks, real estate, or both: market volatility, cash flow, diversification, management and transaction expenses, liquidity, tax implications, and your own time and effort. Each characteristic of investing in stocks and real estate has advantages and disadvantages. Ultimately, it comes down to your risk tolerance, time frame, and investing objectives. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, don't forget to check the links in the video description. And while you're here, click to watch one of these two videos appearing on your screen right now. I will see you there. Take care and stay tuned.